Kind of weird to record this since it's not a class or anything, but in case people want to see it. Oh, my computer is being all slow now. What's going on? Okay, you can see my screen, right?
Yeah.
Okay. So what we talked about last time in our first meeting was kind of three basic things. One, I gave you guys an email. I don't know if that's going to work because I forgot these days when you log on email from different like countries or locations, it thinks you're a scammer. So instead, I'll just post the videos in our WeChat group. Second, we talked about the difference between TA and FA. That's pretty important. TA is technical analysis, FA is fundamental analysis. So just to review that, TA, technical analysis, is when you're trading based on the charts. When all of your trades are just based on the charts and nothing else. So like I've had pretty much one teacher, and my teacher would buy and sell stock. Let's see. Let's pick. Here, let's look at Chinese stocks. I know Tencent went down crazy. Did you see what happened? Tencent went down by like 10% yesterday. Bilibili, let's see, iQIYI, Baba, where's Tencent? JD, Tencent. Yeah, there was a big crumble. The price went from 72. This is, I'm looking at a 4 hour, 1 hour. So, oh no, what happened yesterday? Oh yeah, right here. The price fell from 61 down to 56 in like a couple of minutes. There was some news that came out. You know, China has a bunch of new laws recently about teaching English. I don't know if you guys know this stuff. China has recently decided that the government has decided that having all of these after school schools is bad for kids. You know, there's too much, there's too many families that don't want to have children right now because they don't have enough money, because you can't just send your kid to school in China. You know, after school, they have to like go to the teacher's house and do homework for 6 hours. And then on weekends, they have bushiban classes. And, you know, so the Chinese government, in this is the way they do things, has decided they want people to have more children. So now private English schools are banned. So if you're an English teacher, it's not a very good time in China, because they're just banning the schools. So it's a pretty weird thing to do, but it's definitely a very Chinese thing to do. So schools like, which is my, Baidu, oh, Tencent. Which is the school one? Yum China Holdings, they have Taco Bell. Oh, TAL, I think. TAL is education. Yeah, look what happened to the price of TAL recently. You know, if we look at, and I'll explain what I'm talking about in a minute, but let's look at a daily chart. You know, the price of tal back in February was $84. Now the price is, it looks like $6. And Tal is one of the biggest education companies in China. EDU, New Oriental, maybe you've heard of that, New Oriental Education. The price went from around $20, and the price is currently at $2. You know, now my teacher, oh wow, it's split 10-1. My teacher would love this stuff now, but my teacher refuses to trade Chinese stocks because it's a little unpredictable what the truth is about their money. So anyway, let's, that's, you know, the point of what I was started with is what's the difference between technical analysis and fundamental analysis? With technical analysis, you could take a stock, let's say let me find something you definitely don't know. Let's look at a silver stock. Let's look at AG. AG is a very popular silver stock. So with technical analysis, you should be able to look at this chart and look at all these lines and make a decision whether you think the price is going to go up or down, even if you don't know what this company does. You know, technical analysis is just looking at the technicals. It's just looking at the chart. And it doesn't matter what the company buys or sells or does. That's technical analysis. You're buying because the chart says buy. That's it. Fundamental analysis is when you're buying a company or you're buying stock because you think it's a good product. You think it's a good company. And then you're not just looking at prices because, you know, it doesn't really matter what the price is. If you're buying Apple, for example, let's look at Apple. Wow, Apple's price has been all over the place. Oh, but that's the 1 minute chart. Okay, now it's not. There's a saying in trading, when in doubt, pull out. Because if you look at like a 1 minute chart, Apple looks like it's trading up and down, and I don't know what it's going to do next. It's so crazy. But when in doubt, pull out, which means look at a bigger time. So right now we're looking at 1 minute. You can see on the top, I have 5 seconds, 1 minute, 3 minutes, 5 minutes, all of these different times. So I had asked you guys last week, I said we were talking about the difference between technical and fundamental analysis. Technical analysis is just trading by looking at charts. That's it. Nothing else. It doesn't matter what the company does. You know, it makes no difference. You just look at the charts. And then fundamental analysis is when you're looking more at the company, the CEO, the product, the quality. You're looking at other things you're looking at things besides the price. And those are the two kinds of trading, really. Then we talked last week about what are your personal goals, and then we talked about how to use TradingView. So have all of you gotten a not subscription, have you signed up for the free version of TradingView? Ayana, yes. Anais, did you sign up for this? Okay, good.
I did.
Do you have it?
I have it too.
Okay, good. Okay, and then we talked about the 2 rules of trading. The 5% of capital rule, which says however much capital you have, let's say you start trading with $100, you can't put more than $5 on a trade. On each trade. I mean, look, you could put all your money on one trade, but that's how people lose money. People get thrown out of the market and they lose everything because they don't manage risk. They'll put too much money on one trade, and then what happens is, let's say you have $100 and you put half of it on a trade and you lose. Now you have $50. What people want to do is they want a revenge trade. They want to get that money back. And so they're going to start putting more and more money on each trade. So the safest thing is to just have a rule. In fact, my teacher had a 1% rule. he said, you know, we're looking for different things on the chart, and each thing we find will add 1% of our capital. So he was very strict about this, but that's how he's become very successful. So whatever your capital is, don't ever trade more than 5%. Now, that's the first rule, and we'll talk about that in a second. The second rule is establish a 66% edge, which means out of 100 trades, you want 2/3 of them to win. If you can do that, you'll make a lot of money. Most people can't. Even on Wall Street, they can't. They're right like 50% of the time. I'm just going to turn on the air conditioner. You know, if you can be right more than 50% of the time, you're doing well. And then I asked for homework for you to choose one chart on TradingView and make S&R lines. We also did S&R lines. I don't know, did any of you guys do that? Ayana? Okay, good. I'll ask to see them in a few minutes and we can talk about them together. So what do I want to do today? So I want to review your S&R levels on the chart, weekly and daily. We're reviewing the plan now, the 5% of capital rule. Okay, first thing I want to say about that. There are two ways you can risk money. Let's say you're starting with $100. Let's go back to a chart. Let's go to, I don't really like this wolf pack though. Just a second. Okay. So with a free copy of TradingView, you should be able to open, I think you can open like 5 or 6 different charts if you wanted them. I have a paid copy, so I have more, but okay. Let's go back to looking at Apple or something. Something that we all understand. Okay. And I'll play with this other stuff later. Okay, so there's 2 ways that you can risk 5% of your money. Let's just look at the chart. Let's say that you want to buy some Apple stock. And recently the price has gone up a lot. So, you know, price went up. We should have bought it down here. But let's say you think the price is going to go up more. Now there's 2 ways you can risk money if you want to buy Apple stock. Right now the price is $147.18. Let's say you have $100 and you want to buy stock, this place right here. Okay, so you want to buy Apple stock at this price right here. There's 2 ways you could do this. First, if you have $100 to start, you could buy $5 worth of stock. Now, you can't do that on Apple. I mean, these days you can, but not on the stock market. On Robinhood, you can buy what's called a fractional share, which means you buy $5 of Apple. You can do that now. That's a new thing. So, but let's say for this, you would buy a cheaper stock. So you could buy $5 worth of stock. Now, if you buy $5 worth of stock, or for me, I don't buy stock, I buy coins. And lots of coins are under $5. So let's say you buy $5, then the price could go to 0. You lose it all, that's losing $5. Does that make sense? You know, so you can buy things that aren't that expensive. And if the price goes to 0, you lose $5 and you still have 95. That's one thing you can do. But there's another thing you can do, which is probably better in terms of being a successful trader. And that is, or you could buy, you have $100, right? You could buy $100 of stock, but put a stop loss at 5%. Then, although you spent $100, actually, as soon as the price goes down $5, you were out of the trade, leaving you with $95. So you're still only risking $5. Now, this is a pretty important point. So I want to know if this makes sense to you.
The stop loss thing is what you showed us last time, right?
Right. So the chart I was looking at this week was this coin Aave. So looking at Aave, Aave right now is pretty expensive. You know, this was my example of the trade that I would have made. So now Aave is like $326. Let's find something cheaper to talk about. Since I like coins, let's find something. Matic. Okay, I think Matic's a good coin. Matic cost $1.04. You know, so you have, if you like this coin, you have two choices if you want to buy it here. Now, this is your buying measurement tool. Long means you think the price is going to go up. Short means you think the price is going to go down. Those are really the only two I use here. Sometimes I'll use price range, and that's if you want to measure, like from here, you can pull it up, and that is to tell you, if you want to know how much did price go up, it'll give you the percentage. You know, like you want to know how much money could I have made or something. You know, you can look at, that's 4.67%, because it's important to do that sometimes, to remember that this looks like a really big increase. Like from here, all this green all the way up, it looks like a really big increase. And this over here, you know, from 99 cents all the way up to $1.12. I mean, look at how big that is. And it is big. But if you bought $5 of Matic, let's say that's 5 Matic, how much money would you really make? You know, so let's say you bought Matic You bought Matic here, and you sold it all the way up. Let's say you were lucky and you sold it right around the top. Okay, that's right around here. So you sold it at $1.13. Now that's a great trade. That's 4.78%. So if you bought 5 of them, you could have made 4 times 5. Well, if you bought 5 coins and you bought them at 99, so you bought them at $1 and you sold 5 coins at $1.13, you made, what'd you really make? 50 cents? And that's part of the problem with that people don't understand with trading is you can make a really good trade and make like no money. You can be right and still make no money because you chose the first way, which is I want to risk $5. I'm only going to spend $5. And that way you don't make that much money because you were saying, I'm only going to risk $5, and that means the $5 I put in, it could go to 0. But what if you don't think it's going to go to 0? Then you're better off risking $100 or $50 or whatever. Let's say you risk $100 and you buy 100 Matic. But we're going to change this on the red as your stop loss. Let's move your stop loss. Let's say you're buying it at for math, easy math. Let's say you're buying it exactly at $1. If I can get it there, about. Okay, about. So close. Okay. Let's say you're buying it pretty much exactly at $1. When the price goes down, you can choose where your stop loss is, like when you'll sell. What's 5% of $1?
0.5. 0.05.
Right. So we'd then be selling at 0.05. We'd be selling at 99.
By the way, hello everyone, good to see you all.
5% of $1. It's 5% of 1. Yeah, so. Oh, so it'd be even less. That would be 95, right? So then our stop loss would be like down here. But what a lot of people do is they'll move their stop loss like all the way up here. Now, easier. Let's make it 90, 98. Okay. Now, when you bought it at $1. If the price goes down 0.02 cents, you're out. So if you bought $100 of this and the price went down to 0.98, 0.98 times $100, you lost $2, right? That's it. You only lost $2. But because you bought $100 of it, you have 100 of these coins. When you sold it at $1.13, you made $13. So you're risking $2 to make $13. That, even though the numbers sound small, that's a great return because the point is just to get good at this over the years. Get comfortable risking $2, risking $5, risking 10. Get comfortable with that. Don't ever try to risk 100 unless you're ready to lose 100 today. I'm ready to lose $2 today. I'm fine to lose $2 today. And I made $13. Okay, great. I go have lunch. Who cares? But the point is, don't think about how much money you could make. Think about how much money you're willing to lose today. Now, if you get comfortable risking $2, now in the future, you want to make your trading capital $1,000 instead of 100. Now, if you bought $1,000 of this, you'd be risking $20. But if you bought $1,000 of this, you would have made $130. Now that's better. You risk 20, you make 130. That's a good return. That's 6.73 times. So you're risking 20 and you're making 6.73 times. So depending on how much you want to make, the more you want to make, you have two choices. One, you can think the price is going to go higher. If the price goes higher, then this number becomes higher. Or what most people want to do, because it's pretty rare that the price is going to go up this much. Let's say you don't think the price is going to go up that much. You think the price is going to go to here. What you do is you make the stop loss smaller and smaller and smaller. Now, like in this case, if you put in a really, really small stop loss, like as small as possible, you'd still be fine because the price didn't go down. The price just went up. So you could have risked almost nothing here. I mean, look, I'm risking that the price will go down 0.004. That's like nothing. But the fact is the price didn't go down. And if you put in $100 here, your multiple is now 21 times because it's all profit. You're not risking any loss. So that's one thing. So there are two ways to do this 5% of $100. The first way is put out risk $5, and if the price goes to 0, who cares? The other way is risk more money, but have a very clear stop loss. Now, in addition to stop loss, people also usually want to have a take profit, which means a level where they will take profits automatically. That's pretty important too. Or else when you see the price going up, greed happens. So if you don't have a take profit level, like you say, I'm going to take profit at 1.08, the problem is then price will go up and you're excited, but then price just starts to go down. And you think, oh no, should I sell? And then price goes up and you're excited, and then price goes down and you think, oh no, should I sell? And then price goes up and you're waiting and you're waiting. And if you wait too long, price goes all the way back down to where you started. So it's really important to have an idea of where you want to buy and where you want to sell. And to do that, that's why we have the thing we did last week, the S&R levels. So S&R stands for support and resistance. And I'm adding one new rule. The goal of trading is to reduce your anxiety. That's the goal. This should be boring. This should not be like, if you're feeling lots of excitement and adrenaline, that's not good. Because that's where people make bad mistakes. Because they're excited, price is going up. I mean, that's what Robinhood did. They gamified trading, so it's exciting. And that's really unhealthy. So this week, let's talk about the S&R levels, the support and resistance, and then let's get into charting and the next thing, which is S&R is the first thing we need to know. Support and resistance levels. And then we'll get into the next two things we need to know. Also, Chloe asked me to talk about something. No, Constance, but she's not here. Okay, so what I looked at this week was, I looked at Aave, because I'm interested in Aave. And so I thought this was interesting. So I created first Now, one thing that's useful is on the right of TradingView, all the way on the bottom, right above the question mark, in these squares. This is called an object tree. And this allows you, like when I put on this line, it's on this tree. That's a trend line. This other one, that's this trend line, and I can hide it. Or I could lock it rather, but I
Sir,
can hide it. Yeah.
based on what criteria was this line listed? The trend line.
Well, I'll show the trend lines in a minute, but so did you watch any of the video from last week?
Sorry, I didn't watch the video of the first meeting. But I'm gonna do it.
Well, you don't have to, but I mean, that's why you don't,
That's why I ask.
that's why you don't know.
Okay, sorry. Never mind. I will see it in the video then.
Okay, so this allows you, like, I can label things. You just click on it and you can label it. And that's really useful because sometimes you want to draw lines and you want to remember what they are. So I labeled my lines here, like daily, 4 hour, and you do that when you draw a line. And we talked about last week, drawing a line is up here on the top left. These are all your lines. So I choose Ray because Ray allows me to start from a certain place. Now, we said last week, you want to start on the weekly. That's always where you want to start. So you always want to start on the weekly chart. Let me take off the daily lines. Okay. You always want to start on a weekly chart where each of these candles is 1 week. This candle represents 1 week. Now, there are different kinds of ways you can look at that. That's over here on the candles. You can look at the old way in America was called bars. I don't like bars, but this is what they look like. The problem with bars is it tells you these like lines on the side. It tells you where the price started and stopped, but it's just kind of hard to read. So I don't really like those. Another way people read is they use a basic line. And a line is good, but the problem with a line is it doesn't really tell you where the price started and stopped. I use what's called candles. Now you can also use hollow candles. Red means it went down, hollow means it went up. I usually use normal candles, which red means it went down, green means it went up. And sometimes I use what's called Heikin-Ashi candles. Most of trading, a lot of trading comes from Japan, because in the 1600s, they developed a system to trade rice, and they were the first people ever to do charts like this. Heikin-Ashi candles are useful because they show trends. So in fact, this is really what happened. The first week of trading this coin, the price started up here at 562, and then it went all the way down to 208. It went back up and it stopped here. The next week it started and then went up. It went all the way up and then back down. The next week it started here and went all the way up. The next week it went here and went all the way down. This is really what happened. This is the ups and downs. If you use the Heikin-Ashi candles, it will give you a trend. So on the one hand, this is easier to see the trend, right? It went down, 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 down. Like it goes up, up. It takes away the red and green and just makes a trend. I think that's easier to see sometimes, but this is the actual week. So how do we make these lines? First of all, I always want to know the all-time high and the all-time low. That's like the first thing I'll put in. I'll look on a weekly chart and I'll put in all-time high and all-time low. When I put in the line, I'll usually go to settings and style. It allows you to choose the color, the type of line. You can decide, do you want it to show the price or not? Like you see the 66685 turns on, turns off. For text, that's where I wrote. I mean, you could write anything you want, like David is great. Like you can write anything you want in the text, but it's useful. And you can choose, do you want to have the text alignment on the top right? Or do you want to have it in the middle of the line? You see it's in the middle, or the bottom of the line, now it's under. That's all style, that's up to you. But it's pretty important to remember these lines because this isn't going anywhere. This is the all-time high. That's important to remember. This coin has never gone above that price. Now, the next prices I'm looking at are places where important things happen. Let me change this. By the way, I always, when I put in a line, I lock it. If it's unlocked and you accidentally move it, then you can accidentally like move a line, you know, and I don't want to do that. So when I put in a line, I want it here. I didn't like it before. The other thing is this magnet on the bottom left. Let me turn it off. If the magnet is off, like now it's off, you can put this line anywhere, right? There's, you know, you could put it like in the middle of something, it doesn't matter. But if the magnet is on, it will automatically move it to exactly the top of the wick or the top of the candle. You can move it to the wick or the candle, but you cannot put it in the middle of something. I like that. So here to me was an important, this is an important level. And so we're looking at a weekly chart. This is the W, right? Here's where you can choose your time. We're looking at a weekly chart, and all of these levels are very important on a weekly chart. Actually, let me add this level here. And you see, I'm not really using lines, I'm using rays. A ray starts at a specific place. A line doesn't. A line goes all the way in both directions. So a line goes all the way in both directions. Sometimes you want that. I don't want that right now. I want a ray. But what's an important level to me? It's any place like, look, two different candles both started at this same place. The price went up there, the price started there and then went down. Like that, to me, that's important. That could be an important level. This is 365.80, so let me label this. I'll lock it. I'll label it. This was a weekly, 365.80. And in my object tree, this horizontal ray right here, I want to label it. That's a weekly 365.80. And I want to move that to my little folder that I call weekly, S&R. Now, what does S and R mean? S is support, R is resistance. So as this price goes up, right now, this green line is resistance. So price might, go all around, but it's going to have trouble breaking through this place. But let's say it does. It goes up. This is the next support. Another word for support would be ceiling. The support is the ceiling. And if the price then keeps going down, now this is resistance. It's going to go, maybe it'll test it. We say it tests it and it goes under a little and then it goes back up. This line is the floor and we call that resistance. Can I erase out here? So support and resistance just mean these lines. So the first thing I did is I looked at the weekly chart. I wrote some important lines that came from the bottom of wicks, or the bottom of, here it's a wick, the bottom of the top of a candle. Here was from, make sure the magnet is on, the top of a candle, and I always lock them. So sometimes I'll do candle bottom, sometimes I'll do wicks. That's kind of up to you. I didn't lock a lot of these. Let's see if they're all locked. Yes, yes, yes. When you lock it, this little circle on the end becomes bigger or smaller, if you see that. Is this locked? Yes, and yes. Okay, those are the weekly levels. So already, this is really important because I now have an idea of where the next ceiling and floor is. Today, the price of this coin Aave is $323.80. The most important thing to do for trading is have a level, a ceiling or a floor, where you're waiting for the price to come to that level. When the price comes close, that is when we start looking at these other things, like all of these other things on the chart. All of these other tools, the MACD, the Willy, the OBV, the RSI, there's so many of these tools. They're under FX. And the built-in tools, there are just so many different tools you could use. And then you have different favorite ones. You can also, there's so many candlestick pattern tools. There's a giant public library of tools that people have made. This library is huge. This is how many people use them. So, some of these are really, really popular. And there's just like an endless number of these tools. But the point, and we call these tools indicators. The only point of indicators is when your price is close to one of these lines, you want to know if you think it's going to bounce off and go up or use it as a ceiling and go back down. That's what you want to know. But you can't trade unless you have these lines first, or else you're just guessing. So first I do the weekly lines, then I go to daily. Now, on the weekly, it looks like there's a lot of lines here, but actually when you go to the daily, look how spread out they are. Right now I can only see 2, but look how useful this is right now for us. The price is exactly at that line. It tried to go above the line before, and then it went back down. Now we're exactly at this line, the 320.40 line. We're right over it. Now I want to know if this price, because should I sell right now? Should I short? If I short, that would look like this. I think the price will go down to this line, let's say, and I am going to risk just a little bit. Let's risk up to this high candle. And that's a pretty good risk to reward. That's 4.34. If I put in $100 and I risk all $100, I could end up with $400. That's a really good profit. So I'd be risking exactly 5% stop loss, right? That's great. So this could be a really good trade if you think that it's if you think the price is going to go down. But how do you know if the price is going to go down? That's the indicators. Before we get to that, the second thing I do is I mark my daily levels. So let me put those back on. These are the daily levels. And again, I got these levels just by looking at important places in the chart. Places where a candle, essentially a place where price changed direction. So here price was going up and then it changed direction. That's important to me. Price was going down and then it changed direction. That's important. Price was going up, it changed direction. That's important. Price went down a little, went back up, and then stopped, went down, then went up. I want anytime the price changes direction. And again, I label them. I put it in a different color. For me right now, daily is orange. I might change the color later. I'll see how I feel, but that's my prices right now. Now I have a lot of good levels. And the thing is, it looks kind of crazy, but it's going to look crazier because next we go to 4 hour. Now, when you go to 4 hour, you see it doesn't look so crazy anymore. Now I have more levels to work with. Now, this level is important, this number right here, because we have both a daily and a weekly. And this gives us the first big thing I wanted to talk about today, which is called confluence. Confluence is when you have more than one reason why this price is really important. You know, you want lots of reasons. So if you have like 3 good reasons why this price level is important, then you know it's a really important price level. So now we have a little bit of confluence here. So then I did the same thing I did before. I added more lines for the 4 hour. And I put these in pink. And I also labeled them. And I did it the same way. You know, when the price went up and then price changed direction, I'm going to put a line there. Price went down, I could put another line here. And let me label that. That is a 4 hour at the price of, is that, I think that's $2.99. Okay, lock that, and also make sure it's marked. That's a 4 hour at $2.99. Make sure I put that in the right folder so I'm organized. Okay. So now I'm good. I have lots and lots of levels. That's the first thing we want to do when we're trading, is make sure we have these S and R, support and resistance lines. Now, this does look like a lot of levels, but remember, if it gets to be too much, you just go to the object tree and you can just hide some of them. You know, you don't want to throw these away. You don't want to put it on and take it off and put it on. You want to keep it on and just keep it in your object tree, keep it organized, and then turn it on or off. The reason it's good to have these levels is if I'm trading 4 hour, generally the rule is if you make a trade, it'll take about 50 candles before the trade is done, 20 to 50 candles. Now, let's say you're trading a 1 minute time chart. Look at Aave on the 1 minute. You know, it looks like, oh my God, it's just going up right up to this level. You know, right up to this level is where it went. And on the 1 minute time chart, oh my God, it's going crazy. But you see, all of those lines we saw before, like, oh my God, there's so many lines. If you go to the 1 minute chart, there's just 1, 2, 3 lines that are useful to us right here. So the more you go in, the more important, these lines are really important. If I was trading Aave right now, I would decide, do I want to buy and sell right here? And if I'm selling it, this is where I think it's going. This is my target because I already have the line here. You have to have a target. The way people lose money in trading is they don't have a target. They're buying it and they hope the price goes up, and when it goes up, they don't know when to sell. Or they are watching the price goes down, but when it goes down, they don't know what's a good price to buy. You have to start with targets. And then you try to figure out what happens at the target. Now, again, remember the saying, when in doubt, pull out. Right now, this looks like a crazy rise. Oh my God, it's going up so much. But let's look at the day chart. What we're seeing is that. What we just saw on the 1 minute chart looks like this. You know, the price went from around 303 to 324 on the 1 minute chart. The price went from around 303, here's 303, to 324. So when things start to look really crazy, and this is, you know, I like this as a life lesson too. When things start to look really volatile in life, and there's so many ups and downs, take a longer look at your life. Look at things, how they've been happening over weeks and months and years. Because that, oh my God, it's going up. Oh my God, what should I do? That's just this candle right here, nothing else. This candle means nothing. I mean, look how far back, how down it went before, and then it went up higher. And then if you go back in time, look at this tiny, tiny green candle compared to where the price was, not long ago. This was just in May. This wasn't that long ago that the price was so high. So you can't, every time you get a little overwhelmed, pull out, go back to a day, go back to a week. These little changes in price don't matter. My teacher used to say, if you're trading on like the 5-minute chart and you feel uncomfortable, that's too fast. Go to 30 minutes. If you're trading on 30 minutes and you feel uncomfortable, it's too fast. Go to 1 hour. You have to go to a place where you don't feel anxious. So the first thing to do is to create these lines, 3 lines, daily, weekly, and 4-hour, okay? Let's take a look at your lines now and just take a quick look at them. How do I let you share? Okay, let's take a look and see how we see them. Ayana, you want to share yours first? Let's see what stock you chose and how your lines are.
I'm afraid mine is so messy.
I don't care.
Okay. Here is mine, but I haven't named it or anything. Yeah, I know. That's crazy.
And this is on the daily too. Okay, so you have a lot of lines. Why did you put all of these lines on? What do they represent?
Down and the up. Like I chose, oops.
By the way, the first time I did this exercise, that's exactly what my chart looked like.
I forgot how to, oh, is it? Oh, wait. Like, now I'm confused looking at this.
What are you trying to do?
Okay, so the blue line represents the weekly, and the yellow line represents daily change that happened in the company I chose was Pinterest. The company,
okay.
Yeah. Well, I marked each line that I thought is important.
Sure. Sure, and that's great. It shows that you were willing to put in the time. That's how you learn. My first chart looked exactly like that. And I remember thinking, what in the world am I supposed to do with all these stupid lines? I can't read this.
Yeah.
But it's a great exercise.
Yeah. But now I get it. I mean, after you explained it now, I mean, it's pretty clear now.
Okay, so then this week, clean up the S and R lines on your Pinterest chart.
Okay, all right.
Good. Anybody else have a chart to share?
Sorry, sir, I don't have any chart for today.
That's okay.
I have one.
You do, Minsu?
Yeah.
Okay.
This one's pretty good.
We're on gold. Oh, you like the light view, not the night view? Okay. What are we
I
on?
actually don't know how to change it, so I just like played it like this.
Oh, night to day? Let's see. How do I change night to day? Hold on, let me
I changed it today as well.
share the screen. I need to
Me.
see the chart. Or Ayana, do you know how?
Yeah, wait a second.
Let's see.
Do you see the setting? It's yeah, when it says here the setting left.
Share your screen and show us.
Yeah, sure.
I mean, there's a lot that I don't know about Trading View, so.
Yeah, I just thought that the night view is more comfortable for me.
I like night view.
Yeah, me too. That's why I was like trying to. Can I share, right?
Yeah, yeah.
Oh, but I cannot
I
while
need to unshare. Okay, there.
um it's here. Wait a second. Here.
Oh, appearance?
How did you go to the setting again?
It's the gear on the top next to the name of your chart.
Here. Okay, should I stop sharing? I forgot how I did that.
Okay, let's find out. Let's figure this out. Here's the gear. Show the events, trading, appearance, background is a gradient. Template.
I found it.
You did?
Yeah, when you have like you have the notifications, it's 11 or something. Oh, okay, I'll share. Okay. It's right here. And then dark color theme. And yeah.
Oh, okay.
Should give us some sort of a tasks like that, sir. Let's say find a tool that
I
helps
gave
do
you a
this and
test
that.
last week. I said draw S&R lines. Just
No,
do it.
that's amazing. I love it. I'm just saying that in order for us to devote ourselves even more into this, to
Okay,
immerse into this
here's your test.
website.
Find a good YouTube video called How to Use TradingView and watch it. That's your, there's like a million of those videos. I'm not gonna recreate them.
Okay.
That's the right thing. I mean, something that you already know how to use, some sort of an important tool, and you tell us to find it ourselves, like
Showing you how to use
however we
mine.
like it.
Okay, I'll show you the next important tool now. Okay, so I've seen Ayana's. Okay, Minsu, back to yours. So you drew these lines. What are they based on?
They represent transition points, like where I think there's up to where they think they're going up or going down. And wait,
Now, are you drawing them from the wick and tail or from the bodies? Do you know what I mean?
What do you say it again?
The wick and the tail is the line that goes up and down. The body is the candle. And it looks like some of yours are from the wick. If you could pull in a little bit. Right now, we're on the daily chart. So it looks like you're drawing it from the wick or you're drawing it from the body.
Weak is the tip, right? Tip of the
Yeah,
candle.
the tip of the line.
I did with the tip of the
Underneath the
candle.
line.
Okay.
Wait.
So is blue weekly?
Oh, so the green one is a daily. Daily, it represents daily, and green one and blue one represents weekly.
Will you show me the weekly chart? Well, that still has. Oh, I see why. Okay. So the blue is weekly.
Blue is weekly.
So like the one at 1900.88. I'm looking at the price on the right side, the 1900.88. Yes. That one. You drew that line because of what?
I think I drew a line
Because of that up and down. Okay, sure. Okay, I mean, it looks pretty good. And then the interesting thing to do is to then go back, like if you go back, I mean, gold has a long history on TradingView. You can look back like 30 years or something. And it's interesting then to look back and see in the past, so this is below anything now, you know, but in the past, when, and you can always go to monthly if you want to go back faster, but, or another quick method is control arrow left. Control arrow left will speed, or control arrow right will speed in different directions.
Oh no.
It might be different on an Apple. It might be like command arrow left.
Sure. Can we also use this tool to launder money?
Sorry?
Can this platform be also used to launder money?
To what?
To launder money,
To
L-A-U-N.
launder money. How would you, this
Yeah.
is just, these are just charts. You can't actually make any trades on this platform.
Oh wait, it's not real.
No, well, I mean, it's real. It's just, this is just, that's, you know, it's like, it's a measurement, you know? This is an oracle. This is where they collect
Oh,
real-time data, but it's just data. Okay, so Minsu, this is good. I'd like you to, you know, for homework, try to label them like I did. Keep them on your object tree. And yeah, just make it clear which lines you have. You know, maybe you do have kind of a lot. I might narrow it down to just the key levels,
Okay.
places of support and resistance. Okay, let's unshare. I'll show David how to launder money quickly.
thank you.
There's a couple of ways. So, there's another one that's like this. What is it called? Maybe it's called tornado. Yes. Okay. One more. So generally, money is laundered in a couple of ways, which is kind of an important thing to know in the world today. You know, one way money is laundered is the most simple way, which is you get money from, let's say you have some illegal, I probably shouldn't be recording this. Let's say that you have some illegal business. So let's say you have some illegal business, like, I don't know, I tell, okay, Minsu, you work for me, we're doing protection. So you go to Ayana's store and you say, Ayana, if you don't pay us money every month, you know, your store will burn down. You better pay us every month, whatever. We get our money some illegal way, you know, or it's bribes or it's whatever. We do an illegal stock trade. You know, Minsu, your father works for Pinterest and he knows that the price is going to go down. And so we secretly sell, you know, whatever. We do something illegal. And you get all this money. The most common way traditionally in the world has been to move it through a cash business. So a really common example is a car wash. And this is the example they used in the TV show Breaking Bad. You know, he was getting money from drugs. You can't put $1 million into the bank. They want to know where that money came from. But a cash business like a car wash, you could just say, oh, we washed a lot of cars this week. How do you prove it? You know, most people pay in cash for that. So there's no way for the government to measure how much of the blank blank did you sell if it's a service. You know, if you're talking about like selling coffee cups, well, I mean, if you say I sold 1 million cups, the government can check, did you buy 1 million cups? How'd you sell them if you didn't buy them? You know, but for a service like car wash, or the biggest example I know in China, movies. You can filter. That's a lot of the reason that in the past Chinese movies were so bad. It didn't matter. They're going to make a profit anyway. The money is illegal. So let's say that money comes in, and this is not just China, but I'm just using that as an example. I had a student who wrote a thesis on this. Let's say that money comes in from a movie from like the drug trade, and they use that money to pay the photographer, the director of photography, the camera crew. I mean, you're just paying salaries. So I could say, okay, Ayana, you run the camera. I'm going to pay you $10,000 a week. That's, you know, it's a good price. So here's your money. I don't even care. The government can't check if you came in. The government can't check if I really used you for 6 months or we did it all in 1 week. They don't know. And then you have to declare the money. But as a movie, I'm paying money to 1,000 different people. So paying money to people is the best way to run money through a cash business. Now with crypto, the first one was called tornado.cash. So what Tornado does is you put your money into Ethereum. So I don't know what you guys know about crypto. Do you guys know anything about crypto?
Yeah.
You know what Bitcoin is?
Cryptocurrency. Yeah, of course.
So this is Bitcoin. The number 2 coin is called Ethereum. These are number 1 and 2. You can buy Ethereum, and you can buy it lots of places. You know, don't buy it on Robinhood or PayPal. Don't buy it there. You know, you don't own it if you bought it there. But you can buy it on lots of places, and then you would deposit. Oh, you can deposit a lot. You can deposit USDC or USDT. That's great. Because these are US dollar coin and US dollar tether. Each one is worth $1. So anyway, you put the token in here. You can decide how much you want to put in. So like 100 ETH. 1 ETH cost $2,600. What's 100 of those? That's $260,000. So you put in $260,000. This is happening. These are the latest ones. People are doing it. And then you connect.
They bought 15 coins, 15,000 coins in 6 hours? Like 6 hours ago?
No, this is just the transaction number.
Oh, sorry.
I think. I hope. Yeah, 1,504.17 equal user deposits. Each user deposit is 100 ETH.
Oh, okay.
Each person here, I mean, we're talking about $250,000. You know, so, and this might have been one person who did, you know, $750,000, $1 million 9 hours ago or more. You put it into this, you connect it, and then when you withdraw it, you'll take it out. Now your ETH is not traceable. It can't be traced. And now you put the ETH into some other thing that connects it to RMB or US dollars or Russian rubles, whatever. EU, you know, euros, and then you just trade it, but nobody can trace it. That's Tornado Cash. That's one, it's called a chain, called the ETH chain. This is a different chain for Binance. And Binance is also a top coin. That's number 4 coin. That's $332. And Binance works on a different computer program than Ethereum does. But here, you can do 1,000 BNB. So what's 1,000 times 332? That's $332,000 per transaction. And you do the same thing. You deposit the money, and you're not really depositing it, but you're putting it through, you're running it through this car wash. That's all it does. And it removes the ID.
Oh, okay.
And the ID is gone. Finally, Haven Protocol is a very interesting system that has a vault. Haven Protocol is the equivalent of an offshore bank account, a digital offshore bank account that the government can't know about. But the issue about this is, of course, let's say you want to put Bitcoin in. So you'd create a vault. I mean, I have a Haven vault, but I'm not going to open mine. But what you would do, the thing is, it's not really private yet, because let's say you put in $100,000 or $1,000, whatever. The government, I mean, it's not like that money came from nowhere. You had to put the money in. So it's kind of like, let's say that you have a bank that's in the Cayman Islands, some like tax haven. Yeah, that's why it's called Haven. Let's say you have some tax haven like the Cayman Islands. And when you put the money in there, the government can't find it. But there's a video camera that shows people walking into the bank. Well, I mean, okay, you're right. The government can't see your money, but they know you put money in. And it's like that, this stuff is not, this is all very new technology. So it's not really developed yet in terms of, and I should say, I do not, cheat on my taxes, or I love this technology because I love autonomy. I don't think the government should be so involved in regulating money. I don't think they're doing a good job. Not in America. I mean, maybe China's doing better. I think America's doing a bad job of regulating their money. And I don't like that. I don't trust a bunch of 80-year-old senators to make good decisions, and they're all white. 80-year-old white male senators. I don't trust them. I'd much rather have Bitcoin. That's why I got into this in the first place, because I believe the future of everything should be decentralized. One of the things I like a lot, for example, and it'll make sense to anybody who knows me, is Claros. And Claros is not working very well yet, but it's a proof of concept. It's the idea. Well, it looks like the price went up recently. Let me show you Claros.
What's Claros?
It's a kind of coin. It's called the Justice Protocol. So you know how a court works, where you have jurors, you have like 12 people in the jury, and you have lawyers, and you have a judge. They're building a court that's online. And the way it would work is, let's say I want to sue Ayana. We had a contract and you broke the contract. Now, of course, we could go to court. But what if I'm very rich? I have the best lawyers in America, and I have all this money. I can delay the trial. I can make it difficult for you. I mean, we know the problems with traditional law. What if instead, when Ayana and I made the contract, it said, if we have a disagreement, we don't go to legal court first. We go to Claros, which is a justice protocol. Now, they have let's say they have 1,000 jurors paid 1,000, or no, right now they have 825. They have 825 jurors. Now, what would happen is the case would go to these 825 people, and they would all vote. And then, so here's some of the things they do. But let's say we have a small claims. You owe me $1,000 or $10,000, or you broke the contract. These 825 people will vote, and they have a financial incentive using game theory to vote the correct way. And there's enough of them that they can't phone call each other and get involved and be like, let's all decide for David. It's too many people. And this is just starting. I mean, these are very new projects. In the future, there could be like 20,000 people. Then you can't cheat the court anymore. They're going to read the documents, they're all going to vote, and then one of us wins. And it's all without the court taking the law away from, because look, I love the law, but I hate how expensive it is and how long it takes and how it's just a rich, white, heteronormative, masculine. I mean, it is like, that's the history of the law. And it's really biased. It's really biased towards people of color, minorities, women, different ethnic groups. Like, it's really biased. And this isn't. These active jurors, they don't know that Ayana is a woman. Ayana, this is just like case number 3562. They don't know. They don't see us. It's totally anonymous. And I like the idea. There are a lot of really cool ideas that I like a lot in crypto. And again, with TradingView, you should be able to pretty much look at anything. Claros, right? So even though it's brand new, TradingView has it. TradingView has everything. I don't trade anything that's not on TradingView. Okay, let's go back to, so that's how you launder money. Don't do it. Don't launder money. It's just not worth it. So the next thing I want you to do for your homework, the first thing I wanted you to do was to make these, let's go back to the 4 hour, to make these lines, the daily, the weekly, and the 4 hour lines. The next thing to do is called trend line. And a trend line, that's the first line up here. It says trend line. Now with a trend line, I would take the magnet off. You are now connecting either wicks or, like right now I'm doing the tail, but you don't have to. If you choose to do the body, you can do the body, but you cannot ever mix them. You can't do body to tail. It has to be body to body, or I prefer tail to tail. Now here's a trend line, for example. You could also say, this is a trend line because I'm going from here to here. That's fine. You could also say this is a trend line because I'm going from here to here. Trend lines, I do not usually lock them because they change all the time. At the beginning, this probably would have been my trend line, but then I probably would have drawn a new trend line that would have looked like this, from here to here. And look, this to me, I would have then gotten rid of this. This looks like a good trend line. I mean, the point is, trend line is more art than science. You have to feel it. So for me, looks good. Look, it comes down, it touches it. It comes down, it touches it. It comes down, it touches it. That's good. It touched this trend line 4 times. That makes it a very valuable trend line. And then when it came down and it went through the trend line, that's important. Then it comes back up, and look, it comes right up to a really important level where we have a daily and a weekly. That's important. So it goes below the trend line here. Then it comes right back up exactly to this level. And then that's where we start looking at the indicators. And here's what I look at now. This is a special kind of indicator. And what this is this combines pretty much all of these. I'll teach you how to do it, over the course of our meetings. I'll teach you how to create that indicator. But this is how we would start, because this is looking at each line separately, and this is looking at them all together. But then, you'd look at these lines, get rid of this. So, when I drew that trend line, also there is a way when I put this on to share it with other charts, but I'm not sure exactly how. Is it cloning? No. There is a way for me to do it here and have it shared on other charts, but I'm not sure right now. So let's see, here's from July 25th. So I started at this July 25th low. Let's start here at this May, June. Oh, we're not on 4 hour. Let's do 4 hour. Oh, that's why we're not even on Aave. Okay. The July 25th, was that here? Yeah. Okay, so let's say I'm drawing a trend line from here, and at first it would have looked like this, and it's a great trend line because you see it touches it. Let me remove this. I'll explain this another time. You see it touches it, you know, 1 time, 2 times, 3 times, 4 times, and that's great. I'm just watching the price touch it, you know, and so as long as the price doesn't go through it, to me, this is a good support. But as soon as the price went through it, I'm like, uh-oh. Now I gotta watch when this candle closes. And okay, it went back above. It went to that important level, but then it lost it and it went down. You know, and then and at that point, I probably would draw another trend line that maybe looks like this. And now to me, that would be a resistance line. You know, we're still talking about the same idea. We're still talking about support, which is the floor, and resistance, which is the ceiling. That's the basic big idea of trading. That's the biggest thing that people don't get at the beginning. They're just trying to buy low and sell high, but they don't have a clear floor and ceiling. You know, and trend line gives us our diagonal floor and ceiling. The difference is this is moving. You know, the other one, the weekly, the daily, the 4 hour, that's static. That's not moving. It doesn't change. You know, those daily levels, they're going to stay there for me. And so right now, this is broken through the trend line. I probably would have sold somewhere around there. Because at this point, when the candle, this red candle closed, because remember, this one went below the trend line, but it didn't close there. It then went back up and it closed above. Close is when the candle opens or, you know, ends. But here, the candle closed below the trend line, I'd be out. That's another big rule of trading. Keep your losses small. You're losing money, get out. You're going to be making hundreds of trades for little bits of money. $5, $50, whatever it is. You know, you don't want to be in a losing trade. So the next thing I'd like you to do on your chart is try to look for some trend lines. Remember, you can always go backwards in time. This is, control and the arrow. You can always go backwards in time. You don't have to. By the way, if you did go backwards in time and you want to go back to the present, it's these 2 little arrows on the bottom right. You just click that and it brings you back to the present. You know, you don't have to use the most modern information. We're just practicing. So I want you to draw. Now, what people often do is, and here's what I'd like you to do, they do a trend line from similar places, a top and a bottom. Now, this is some valuable information. Here's where we get into things that are called patterns. And we're not going to talk about patterns today, but like this pattern is called a rising wedge pattern. A rising wedge pattern is not good for price. When the top is a little slanted and the bottom is very slanted, that's not good. But then there are other patterns where like the top is flat and the bottom is slanted. There are lots. There's triangle patterns. There's lots of patterns. That's something that we learn in trading. But for now, I just want to keep talking about support and resistance. Now, the next thing I want you to do for homework, and this is the next huge thing, support and resistance is number 1 because you need floors and ceilings. Trend lines is number 2 because you need floors and ceilings, but now we have them diagonal also. Number 3, get rid of this. And let me put my ones on from before. Here were the trend lines I drew before. This is what I was looking at. This was my earlier trend line, which now I would have sold because the candle closed below it. But as long as it was above the trend line, you know, you can just trade that way. Lots of people just like that. That's how they trade. They just make a trend line. And as long as the price is above the trend line, it goes up, it goes down, it goes up, it goes down, but it's going up. Higher lows is how we would say it. The low price is higher. Here's the low price. Then here's the low price. Then it goes up, it goes down. Here's the low price. It goes up, it goes down. It goes up, it goes down. But the low prices are higher. That's higher lows and higher highs. So right now it's in sort of this channel, but now it broke it. Here's what I want you to do next. And here's the next most important thing, is called W. W and M. Now, the way we find a W, it cannot be, first of all, we're going to use the polyline tool. This is under the brush. If you use the brush, that lets you write, you know, that you write with the brush. If you use the highlighter, you understand rectangle, you understand ellipse is useful. Sometimes you want to make like a circle, you know, and you could change the color of all this stuff. But polyline is very useful. Polyline allows you to make like this W, like point, and connect the points. So let me find another one. Let's go back in time a little and look for, okay, so like start here, the price went down. Then the price went up, and then the price went down, and then the price went up. Double click to end it. Now, you can never have a W that looks like this. That's not a W. A real W, the second has to be higher than the first. That's the rule. Okay, the second one.
And it could also be the, yes, that's the one.
Sorry?
Yeah, I just wanted to point out that it could go out of the borders, let's say W borders.
And the same thing for an M. You can never have an M that's like equal both sides. That's not an M. An M, the second one, needs to be lower.
So do you mean that for the bottom and the top, like the second triangle should be for the W higher and longer, and for the M shorter and longer as well?
Well, a W is bullish. Okay, the W is bullish. Bullish means price will go up. The M is bearish, which means price will go down.
Can they have W and M together?
Sure, you can have an M inside a W and a W inside an M. If you're looking, let's say we're looking at the daily chart. Let's find a W on the daily chart. Aave is pretty new, so it just doesn't have a lot of history. Yeah, I mean, you might say this is a W. See it? Because price went down, up, down, up. And these two downs, the second one is higher. So this could be a W right here. right? That could be a W because the second one is higher. And then inside that W, you know, if we went to the 4 hour or something, inside that W, there's like little W's inside it or M's inside it. But generally, W and M is absolutely critical. But here's the thing, you can't just have the W or the M. That's not enough. It has to be what's called confirmed. That's the key that a lot of people miss. So I drew a W over here. Is it confirmed? By the way, if you're moving your chart around, like you're moving things or you're expanding the price, you do that by, you know, dragging the arrow up on this right side. If you want to get it back to normal, go to the bottom right where it says auto. You click auto, it gets back to, you know, the normal. So this W, how do we know if it's a good W? This center point, so W we say has A, B, C, D, E. So does M. They have, you know, 4 A, B, C, D, E. They have 5 points. The C point right here, the center point, that's the key. And the same for the M. So let's find an M. Is this an M? Down, up, farther down, up, and farther. It's not a very nice M, but it is technically an M. So here is the C point, right? How do we know? So let's, you know what I mean by the C point? Is that clear? Okay. Okay, how do we know when something has confirmed? When something is a good W or a good M? Like this is not a good M, but this is a good W. You draw a line from the C point to the right. So I use a dash line. But you see from the C point to the right, is that line clear? Get a little more clear. Maybe that's not clear. It's not clear. Okay, so you see this white line. This is the line from the C point. When price crosses this line, which is to say, right there, when price crosses that line and goes up, that's where you buy. You buy here. This is the first basic style of trading, is you start with support and resistance, your floors and your ceilings. Then you do trend lines, that's still your floors and your ceilings. And then you find W's and see at that C point, does the price keep going down? Now, the price kept going up here, so that's good. It crossed this C point. That would be a good buy. So my trade here would have been, it would look like this. Now, this is the traditional trading style. I would put, let me get rid of this one. I would put my stop loss at the B point. That's where the stop loss goes. Right at the B point. And I would put my take profit up at my next big target. Now I could put it down. Say I want to move it
Sure, sir.
down to the weekly. Yeah.
I apologize for interrupting. The library is about to close down, so I have to leave now.
Okay.
I truly appreciate that. Thank you. See you next Wednesday, guys and sir. Goodbye.
Yeah, I mean, we'll be done in a few minutes anyway. So, this is the traditional way to trade, is you find the W, you make sure the W has confirmed, and that would be your buy point. Now, what a lot of people do is they front run. Front run means when the W is starting, and then it gets here and they think, oh my God, it's going to be a W. I know it is. And then they buy it too soon. You always have to remember you're trading against the market. You're trading against Wall Street. These are professionals. They have trading view. They know this stuff. They know that people are taught to buy here. And so what do? They drop the price right afterwards. Now, here's what's really interesting. If I made this trade, after I bought it, the price did not go up. The price dropped back down. But look where the price went. Right above my stop loss. I would not have sold. I'm still in the trade. But here's what the market wants. Wall Street knows that a lot of people watched YouTube videos about this stuff. So they know that people bought here, but they also know that most people don't do stop loss. And that if the price fell down below the D point of the W, a lot of people would sell. So the market, it's a lot of manipulation. The market pushes the price down, then it goes back up. So people get excited again and buy. Then the market pushes it back down. So people have to sell. This is how the market collects your money. There's a saying, the market is the best way to move money out of the hands of impatient people to the hands of patient people. It's the best way in the world to get the money out of what we call weak hands. Weak hands, they buy, they sell, they buy, they sell. Oh my God, it's going up, I'll sell. Or I'll buy. Oh my God, it's going down, I'll sell. These are the people who buy when it's high and sell when it's low. That's bad. You want to buy when it's low and sell when it's high. But to do that, you can't have weak hands. You have to have a level that you've chosen. This is my level. So for me, my level is right below the B point. I'm still in this trade. And now we're back up here. I haven't lost any money yet. In fact, I would have made money if I bought here at this price. Now, I wouldn't have made a lot of money yet, but I think it's going to keep going up because there is a confirmed W on the 4-hour.
Sorry, David, I have to leave as well.
Sure.
Okay, bye, guys.
Bye. The bigger the time, the more important these levels and everything are. If you're finding on the daily these support levels and you're finding W's on the daily, like, here's a good example. Here's why I think the price is going to go up. That's what I think is going to happen. Because I mean, we were looking at this tiny little W, but look at this W on the daily. And it is barely confirmed, barely. So I'd still be watching it, but the second, the A, B, C, D, the D point is higher than the B point. This is a good W. To me, this means price is going back up. So I always look for things on the weekly first, then the daily, then the 4 hour, then the, a lot of people make this mistake, beginners. They start by looking at the 1 hour chart. The 1 hour chart, I mean, it's not, there's so much action happening on a 1 hour chart. And then they think, oh my God, this went up so high, I think it's going to crash down. Or, I mean, oh my God, it went up so high, it can't keep going up forever. But on the daily chart, that's not what's happening. On the daily chart, that's not even close to where the all-time high was. I think we're just trying to break through this W. I think we're at some important resistance levels right here. We're kind of trading between this range. And I think the next important level is really coming up at around, 348. These are the little targets. But 348 is the next big. You can't, that's the thing, is people try to make these big trades. You're not trying to do that. You're trying to analyze things on the weekly and the daily and the 4 hour. That's your analysis. You're looking at the big picture, looking at the forest, and then next week we'll start going down to 2 hour, 1 hour. This is where you're making the trade. This is where you're deciding, okay, am I going to buy it at what price? And you're only trying to get it, let's say you buy it here. You're only trying to get it to go maybe up here or up here. You're not trying to get it to go all the way back to $600 unless you're very long term. If you're very long term, that's fine. But I swing trade, which means, maybe a week. I'll buy this. I expect the trade to be finished in a week or two. I'm not day trading. I'm not buying it. Day trading, people use the 1 minute. On the 1 minute, it looks like nothing's happening. But if you pull in closer, oh, there's a lot happening. And if you're day trading, look, there's only, what's our next level? Day trading, we're just going between like this right here. You see how this is support? It went through, but no. It went almost, but no. It went down, but no. It went almost, but no. It's using this as support. It can't break downwards. It's trying, but this is the floor. Now we would need, next week, we'll start analyzing the indicators to understand, how do we know now if it's going to crash down to the next level, the next floor, or if it's going to rise up to the next ceiling? That's all we want to know. We want to know, is it going to change direction? And if it is, I read a very famous book on trading where the guy said, I make money because I sell too soon. I'll say it again. I make money because I sell too soon. You do not make money by getting the absolute top and the absolute bottom. You don't. You make money by buying it when it's going up and selling it too soon. Selling it when it's going down and then buying it too soon. Just like little pieces of money over time. That's how you get successful. And that's how this becomes a way to actually earn money without stress, without anxiety. Everybody's like, oh my God, I'm losing money. Oh my God, there's so much anxiety. They're doing it all wrong. If you feel anxiety, then you should never look at a 1 minute. I mean, for 2.5 years, I never went below 1 hour. Even 1 hour is pretty fast. So what I'd like you to do for sort of homework is look for these kind of W's, use your polyline tool to try to draw the W. Look for the C point and then mark with an ellipse the place where it crosses. That's what I'd like to see. A W, and it could be an M. If you want to search for an M, that's fine too. Let's find a nice M. So obviously M's are going to happen when the price is falling down. Like here's a nice M. The price starts here, goes up, goes down, goes up, and goes farther down. That's a nice M. Now, did this M confirm? Well, let's look at the C point and let's draw that out to the right. And then let's draw an ellipse at the midpoint where it crosses. Did it cross at this point and keep going down? Yes, it did, which means you could have sold at this point, and look, you would have made a lot of money because it kept going down. Now the market tried to be tricky, and it tried to go back up afterwards. This always happens because it's trying to get rid of the weak hands. All the people who are like, oh my God, I was wrong, sell. It's trying to get rid of those people. We want to have clear rules. A clear order for how we do this, clear rules, and then once you made the trade, that's it, you're in the trade. Now, if your plan doesn't work, if you're losing trades, you lose $5, it's not working, then you change your plan. Maybe instead of using whatever SNR, support and resistance levels, you use some other technique. There's so many different techniques, but I'm teaching you the first basic plan, which is support and resistance, floors and ceilings, trend lines, confirmed M's and W's. That's the first basic plan. Then once we have this, the next thing is to add Fibonacci levels is what we'll add next week. And then we'll add our first indicator so we can see all these things that tell us, does it look like at this level, the price is going to go up or down? You know, people look at the price chart and they think that's going to tell them if price is going up and down. But what they misunderstand is that's not what price charts do. Price charts tell us floors and ceilings. That's what price charts do. Price charts just tell us what are important levels. But price charts by themselves do not tell us if price is going up or down. Other indicators tell us that. So the first thing we need to be able to do is read a price chart to understand what are the important levels. Now, another thing that we'll get into, we didn't get into today because we'll stop here, but another thing that I want to get into, next week or after is to start talking about fundamental analysis, which is value versus growth investing. This is when you analyze a company. So like you were looking at Pinterest, right? Let's just talk about Pinterest for a second. When you're analyzing Pinterest, you're not just, some people would just look at the price chart. Let's look at what's Pinterest. Okay, so wow, my God, look at that gap. What happened on this day? They must have had some terrible news happen on April 21st. Wow. Oh, it's 1 hour, that's why. Look at the 4 hour. Okay. I see a nice W right here. And if you were just trading the W's and you bought it when it confirmed right around here, you would have been great. Like trading W's and M's works, but only if they're confirmed. So let's say we're trading Pinterest. Well, this gives us some information, but because this is a company, you also want to know things about the company, and we'll use FinViz for that. And we'll talk about this more next time. FinViz is also free. So here's Pinterest, but here's what we want to know. Let's look at some of this information. So the market cap of Pinterest is $46.74 billion. Okay, but how much money did they make last year? 161.4 million. Okay, that's a lot less than their market cap. How many shares of stock do they have? The shares outstanding. 636 million shares. How much is each share? I should say up here. There's the price. Price right now, $59.53. So about $60 a share. So it's about $60 a share. Do they have a lot of debt? No, they have no debt. Ooh, that's very good. You can short this and option this. That's good. Cash to share. These are really important things we'll talk about next time. The book to share and the cash to share. This means for each one share, book to share, and I don't want to, go over, but book to share means for one share, let's say Pinterest closes today and they need to sell all of their buildings, their land, their cars, their computers, everything. If they sell everything today and they divide the money up for each share, how much money would each person get for one share? And the money you would get is 3.94 times the price. That means they're doing really well. They have 2.75. That's not dollars, that's times. So if one share costs $60, that means they're sitting on a lot of cash. Another really important thing is this is earning per, I forget what that is. This is interesting. Insiders only own not even 1%. I don't like that at all. That's not good for me. That means how much stock does the CEO have? The vice president, the directors, how much stock do they have? If they trust their company, why don't they own stock? Have they been selling it? We go to the bottom. This tells us that they're insider trading. Oh my God. Look how much stock these are the CEO, the senior vice president, the director, they're all selling. Oh my God, they're all selling. What's going on with Pinterest? How are they all selling so much? And they're selling a lot too. $4 million, $4 million, $4 million, $4 million. People are really selling a lot of shares. I don't know. That's not a good sign. But anyway, we'll look at it next week. There's a lot of other stuff. We call this fundamental analysis. Okay, we didn't even take a break. But thank you guys for paying attention, and I will see you next week.
I have a question. You said we're trading against the market, but I don't get it. Like, I don't get what we're trading against the market, because isn't those candles are part of people like us?
Sure. We are called retail. We're retail investors. They also call us the dumb money. We're dumb money. But then there's smart money. Smart money is like Wall Street. So Wall Street, let's say Lehman Brothers or Bear Stearns or these financial investment companies or a hedge fund that has $10 billion. They can push prices up and down, and they do. So if they have $10 billion and you and I bought one share of Apple, they can buy, if they want the price to go down, they can sell 100,000 shares. That'll make the price go down a little. And then people like you and me will see the chart going down and be like, oh my God, somebody's selling, everybody's selling, I need to sell. And I'll sell too. Because what they want to do is they want the price to go down so they can buy more. So then it goes back up. And then people like you and me see the price going up and they're like, oh my God, the price is going up, I need to buy. And then I buy it, and then we're the dumb money. And what we want to do is we want to follow the smart money. We want to know what they're doing, and there are lots of ways to do this. The chart is kind of the most basic entrance into this market, to look at the forest, to look at the trees, because also right now today, I'm just teaching you how to do basic analysis. After this, we'll look at things like the Dow Jones, which is the economy of America. We'll look at the US dollar compared to the euro. You can analyze the world financial systems and economies by looking at, every country has their own sort of top 10 or top 50, they're called mutual funds. So for most people, if they don't know let's say you get some money. Let's say somebody in your family gives you money because you graduate college. You get $10,000 and you don't know what stock to buy. So you put it into a mutual fund. And that is a fund. It's a group, it's a company that will buy the top 100 stocks, or the top 100 green energy stocks, or the top 100 China stocks, or the top 100 oil stocks. I mean, there's lots and lots of these companies, but they will take your money because you don't have enough money to buy the top 100 stocks, but they buy all of them and then they sell one share of that basket for like $20. So you're pretty safe. You're buying a basket of different stocks that represent, different industries, the transportation industry or the education industry or whatever you think is going to do well. People in the past would have done well if they bought the pharmaceutical industry. Because you don't know, should you buy Pfizer or GlaxoSmithKline or Merck? I mean, who knows? Who knows which of those companies is going to have the breakthrough? But if you believe that now is a good time for pharmaceuticals, you buy a pharmaceutical mutual fund, which is a basket of all the big ones. And there are lots of companies that do that. We want to look at the chart of those companies. We want to see, how are they doing? What are they buying? How's the US dollar doing? We can understand a lot about the financial world, not just by looking at Pinterest or looking at Bitcoin, but we have to be able to read the chart first. Because the chart doesn't tell us when to buy and sell. The chart tells us what price levels are important and what the trend looks like. That's what we want to know. How's America doing? We can see the trend of the dollar. I mean, there's some crazy charts. There's I'll show you one chart that's kind of crazy. I think they even took it off of TradingView because the American government made them. Let's see if I can find the M1 money supply. On the daily, weekly. So this is the supply of money in America since 1959. And when I say supply of money, I mean how much US dollars are there in the world, in America. And America had, it's been going up. We had, this is I forget what the multiplier is, but they've been printing money, printing money. This is in around pandemic. It jumped. Look at this jump in the amount of dollars in the world. I don't know if let me see if EMA3 is maybe easier. Okay, well, I'll find it for next week. M2 money stock? I don't know. It's called the Fred, but they need to keep changing it because it keeps getting banned because the government doesn't want anybody to know how much money they're printing. It's pretty crazy, but it's certainly higher than it's ever been. M3. I'll have to look into this better to understand how to interpret that. But okay, anyway, that's a lot for today. So let's stop there, work on the SNR levels, the trend lines, the confirmed W's and M's. And just message me if you have any questions.
Thank you so much.
Okay, see you next week.
See you.